Good morning, good afternoon, and good evening, depending on where you are seeing this video from. I wanna use this opportunity to welcome you all to Trade with KHFX. We haven't really dropped a video. We've been busy with some stuffs, and lately market has been doing its thing. A lot of manipulation, no particular directions. You might place a trade before you know it, market will reverse on you with no chart pattern and stuff. It's just like a free movement. Most times it doesn't follow pattern and all. And on this video, on this section of this video, we'll be talking about Trendline and how and what effect Trendline has on the market. And before we do so, please don't forget to click, share, and like our video so that whenever we post a video, you will always get a notification. And I hope you all are okay. I hope you all are good. I hope the previous video we had, we posted that there's an impact or maybe probably a change towards the way you see market and the way you trade. Just like I said today, we'll be talking about trend line. A trend line is a straight line drawn on a chart to connect important highs or lows, helping traders to identify the market directions. It's just like a guide. If you're an uptrend, maybe you're in a bullish market, there's always a guide that will hold that market while the market is buying, or a guard that would hold the market while the market is selling. And whenever the guard is taken out, it means the current move is no longer holding. I remember, like I used to tell you people in all my videos, the reaction between sellers and buyers are what builds market structure. So when market is buying or when market is selling, that structural move, it means there is a guard that will hold that market while it's doing its lower highs, higher lows, lower highs, higher lows. I remember when market is doing lower highs, higher lows, lower highs, it's forming structure. It's moved by structure. So trend line is always a guard that will hold that market as a structure to connect two or more higher lows. The trend line acts as a support, showing buyers are in control if market is buying. They act like a support, showing them buyers are in control if market is buying, if market is on a bullish move. Whenever market buys, I want to retest or want to pull back, I usually pull back to the trend line. That's a continuation pattern. So trend line, it works. It's just like a guard to the upside. I remember we have two types of trend line. We have higher time frame trend line, while we have lower time frame. The lower time frame, I call it counter trend line because it's a lower time frame, which is part of my strategy, part of when we place our trade, the thing that we see before placing our trade. Now we have downtrend. That's two types of trend line. We have bullish and bearish. And also we have the higher time frame and lower time frame. And we have downtrend line. It connects two or more lower highs. The trend line acts as a resistance, showing sellers are in control. You know, when you are selling a market, you don't expect that market to keep selling. There will always be a retest. There will always be a pullback. So that pullback now is a continuation pattern of that you're selling. It doesn't mean market want to reverse. It simply means it's want to pull back to probably your trend line, which is going to be a 50 fib retracement on a Fibonacci, which I will be teaching how to use a Fibonacci perfectly well. So it's going to be a 50 fib retracement to your Fibonacci. So now, what do you do when market is moving on a lower time frame? If you want to execute market on a particular zone and you find out that market has left you on a particular zone, you don't have to bother or worry yourself. The only thing you have to do is patiently wait for a pullback. There must be a pullback. So trend line on a bullish, on a bearish move is always a guard. It's always a guard to the downside. It's always a guard to the uptrend if the market is buying or the market is selling, which I'm going to show you guys how to use your trend line on the chart, whether through trend line or counter trend line. So how to use your trend line: buy when price respects an uptrend line and shows bullish confirmation. Now, when you talk about confirmations, there are things that makes out a confirmation. You understand? You don't just aggressively enter a trade just because you want to enter a trade. There are things that makes out confirmations in a market. If you're expecting market to a particular zone, you're expecting market to a particular price, you're probably expecting market to touch your trend line. Always remember, you don't just start buying or you don't just start selling. Always have patience for some reactions. That is the confirmation, because when you talk about confirmation, two or more things are what makes out confirmations. There must be a pullback to 50% Fibonacci. There must be some reactions, some kind of reactions like candlestick reactions. Probably there will be chart pattern confirmations or reactions. So you just have to wait to see something first before you talk about execution, because most times when you do aggressively, still remember we have fake outs, still remember we have manipulations. You might be manipulated and market will go and hit your SL and continue to the direction you're expecting that market to. So now on a downtrend, sell when price respects a downtrend line and shows bearish confirmation. Remember, reverse is the case of anything that happens when market is buying. So always wait for also a confirmation when market is selling. Always wait for confirmation after pullback. After pullback, wait for some confirmation. That confirmation is not just your market hit your trend line. There must be some form of chart patterns, chart confirmation, candlestick patterns, 50 fib retracement. So all these things are the things that you look after before you consider buying, or before you consider selling, or before you consider doing anything in the market at all. That's why you need patience. That's why you need support and resistance. That's why you need trend line. These are combination tools you need for you to be able to get a particular thing. Because when you talk about confirmations, you need to see 2, 3, or more reactions to a particular zone before you conclude if you're going to buy, if you're going to sell. Chart tells you what to do. You don't just come out to do what you like. So right now, let's move to the chart. I want to show you guys how it works. All right, I'll be showing you guys how you use your trend line. So right now, I'm going to be looking for a pair to analyze from the top, so we'll be able to show you guys how it works. Let me say let's use C-shape JPY. C-shape. Card C-shape. So this card C-shape, I will be doing the analysis from top. That's from monthly time frame. So right now, this is card C-shape, right? If you watch here, you will discover something that the aim of this video is to identify how to draw your counter trend line. So if you watch this video, you will discover something that this market bought from here to this zone. Then what was giving this market strength or guard to the upside is your trend line. Look at your trend line. If you watch, this market started buying from here. This is an impulse move. Market pull back, that gave us double bottom to continue to the upside. The market bought again, pull back to touch the particular trend line. So now, for you to know that this trend and this uptrend is still valid, is this trend line that is not taken out. You understand? So for the fact that this trend line is still guiding this market, it means the move is still valid, because this trend line is a guard. Market might probably get to this, come back to this trend line and continue up again. It's just like a support to the upside until when market breaks the trend line. That is when you'll be like, okay, the trend line has taken out. What else should I do? Now, for the fact that market broke this trend line down, it means sellers are now coming in. There's no momentum more for buyers again. Then what do? If market start pulling back, you just have to take your Fibonacci tools to draw your trend line, to draw from swing high to swing low, for you to be able to get your 50 fib level that market will pull back to. That is very simple. On the lower trend line usually change. Yeah, for you to get your 50 fib level where the market will pull back to. Understand? And not just that, if market start pulling back, you still need your counter trend line. That is when I made mention of counter trend line to know when to sell or when to buy. But the fact that market pull back to this one, that doesn't mean you start buying immediately. You still need your trend line for more confirmation. This is counter trend line that says, okay, it's time for me to sell. It has taken out, and also not just taking out counter trend line, it gives us double top. There are reactions on that particular zones. There are reactions on this 50 fib retracement level. Market didn't just start selling, or for me, I won't just start selling. I will wait for some reactions first. I will wait for some confirmation that will tell me, all right, it's time for me to start selling. It's time for us to do the selling now. If I didn't see things like this, I don't have interest in selling this market. And when you sell from here, your first level target should be here, because market might get to this level and decide to push to the upside, because this first level target, it could be a double bottom, it could be a triple bottom until market breaks it below. So market might get to here. If you watch, market go to this place and have some reactions. And remember, whenever market starts doing these reactions to the upside, it will start messing your emotions. Your emotions are at stake. It will start messing with your emotions. Even though the market is coming here, but your first level target should be the level that market started pulling back from. So have you seen the work of Trendline? Trendline is a guard to any market move. Trendline always guide you. Trendline will keep you safe. Trendline will make sure you enter a particular trade when you're supposed to enter that trade. Trendline will make you not to enter trade where you're not supposed to enter trade. That's why I don't joke with that tools. It might look common. But here it's not common. And if you watch, not just that, I still want to teach you guys something, though I've thought about it. That's chart reversal pattern. If you watch, if you see just on a market structure, market still moving from here, pull back, right? Move again, pull back, move again, pull back. It should have given us lower highs again, but it couldn't give us lower highs. It came here to give us equal highs. That is when you will know that market is about to change structure. And not just that, after giving us equal high, you just have to wait for this neckline to be taken. And this is neckline. It took out this neckline, pull back to this neckline, which is it pulled back to 50% Fibonacci tools before market started selling. So just like I used to tell you people, the movement between buyers and sellers, the fight between buyers and sellers gives us the structure that we expect on a market. So whatever thing you are doing, you have to combine tools. I used to say it, you have to combine so many tools before you be able to get a clear something in a market. Remember, I used to tell you, I will still say it again, never trade based on trend line alone. Combine it with support and resistance, candlestick patterns, and also proper risk management. This is a sweet setup. I will sell this market from here. That is very simple. I'm gonna sell from here. At least is a little bit this is about something pips. It's about 9 something. So you just have to patiently wait. Just have to patiently wait for this trend line to be taken out, and also your counter trend line to be taken out as well. It's not going to happen overnight. It's not going to happen. Sometimes it doesn't happen under one day, but patience keeps you safe in the game. Patience keeps you safe in the game. Please, if you have not subscribed to this channel, please do well to subscribe, like and share, so that whenever we post a video, you will always be able to get a notification. And trust me, our video will always have an impact in your trading journey. And this is gonna be end of this section. We will see on our next video. You guys should have a wonderful day, time, and also trade. See you guys on our next video.